Good morning. Prices buckled across several asset classes as concern over technology profits and weakness in commodities spurred losses in the stock market overnight. Gold and silver tumbled as traders ploughed money into the perceived safety of US Treasuries as sell-off in Bitcoin deepened. At the close of trade on Wall Street on Thursday, the Dow Jones index fell by 669 points or 1.3%. The S&P 500 index dropped 109 points or 1.6% for a third straight day of losses, and the Nasdaq index shed 469 points or 2%. The Russell 2000 small cap index slid 2% as well. Wall Street's main indexes reversed sharply on Thursday as investors intensified their sell-off of technology shares and fled transport stocks amid worries about artificial intelligence disruption, while they digested the latest labour market data and awaited a key inflation report from the US. The number of Americans filing new applications for unemployment benefits decreased by less than expected last week, likely as disruptions from winter storms lingered. Initial claims for state unemployment benefits dropped 5,000 to a seasonally adjusted 227,000 for the week ended February 7, the Labor Department said on Thursday. Economists had forecast 222,000 claims for the latest week. Fears of AI disruption continued to roil Wall Street as investors began to worry about the negative side of artificial intelligence build-out, which threatens to disrupt the business models of whole industries and raise unemployment. Software stocks, a group that have been plagued by disruption worries in recent weeks, extended their year-to-date losses in the session. The S&P 500 software index fell 1.7% after bouncing back from last week's drubbing. Its biggest percentage decliner during the session was AppLovin, down 19.7%, which reported fourth quarter results which disappointed investors. Shares in the marketing platform have come under pressure this year due to intense competition. Cisco Systems slumped 12.3% after the networking equipment provider posted quarterly adjusted gross margin below estimates. Personal computer makers fell after China's Lenovo warned of shipment pressure due to a memory chip shortage. Dell Technologies lost 9.1%. The Philadelphia Semiconductor Index dipped 2.5%, with Intel and Advanced Micro Devices slipping over 3% each. Most Magnificent Seven stocks posted declines, with Apple and Amazon falling 5% and 2.2% respectively on revived worries about ambitious AI capex plans this year. The Dow Jones Transport Average lost 4%, with CH Robinson falling 14.5%, Old Dominion and JB Hunt Transport lost 4.6% and 5.1% respectively. Financial stocks such as Morgan Stanley also came under pressure, down 4.9% on fears that AI would disrupt wealth management businesses. The KBW Bank Index shed 3.2%. AI disruption fears even spread to the real estate sector, hurting stocks like CBRE, which lost 8.8%, a drop that Oppenheimer analysts pointed out as especially alarming given that the only other times the stock has tumbled further was during COVID-19 and the height of the global financial crisis. Equinix, however, jumped 10.4% after the largest data center operator forecast annual revenue above estimates, betting on strong AI-linked demand. It boosted the S&P 500 real estate index, which rose by 0.3%. Investors sought safety in more defensive areas of the market. Walmart and Coca-Cola shares were up 3.8% and 0.5% respectively, and consumer staples and utilities led gains on the S&P 500, rising between 1.3% and 1.5%. US government bond yields were lower on Thursday as an auction of 30-year bonds drew strong demand following a slump in stocks and commodities that reignited speculation about a potential US economic slowdown. Yields briefly paired declines in the wake of data on the US labour market that showed new applications for unemployment benefits decreased less than expected last week. Sales of previously owned US homes fell in January by the most in nearly 4 years, a month marked by a massive winter storm in the US. Contract closings decreased 8.4%, the biggest drop since February 22, to a 3.91 million annualised pace in January, according to National Association of Realtors data released on Thursday. That trailed the median forecast of economists surveyed by Bloomberg. Expectations the central bank could have the leeway to cut interest rates had been creeping higher until Wednesday's job report, and the market is not pricing in more than a 50% chance for a cut of at least 25 basis points until the Fed's June meeting, according to CME's Fed Watch tool. The US Treasury sold $25 billion worth of 30-year notes at a yield of 4.75% into strong demand. The US 10-year Treasury yield dropped 8 points to 4 4.1%, and the US 2-year Treasury yield decreased 5 points to 3.46%. European share markets fell on Thursday. The Pan-European Stock 600 index closed 0.5% lower, with sectors and major bourses in mixed territory. Financials weighed heavily on the index, with the banking sub-index sliding 1.8%. HSBC and Banco Santander each dropped more than 2%, leading the sector's decline. Industrial goods and services sub-index dropped 1.2%, with Dutch payments processor Adyen falling 21.9%, marking its steepest one-day fall in over 2 years after cautious guidance. In London, the UK FTSE 100 index lost 0.7%, with financials down 2%, but Schroders shares jumped 28.6% to the highest in more than 4 years after US asset manager Nuveen agreed to buy the company for £9.9 billion in one of Europe's largest fund management deals. Australian shares are set to drop about 1% on Friday, in line with losses in New York after a renewed wave of selling hit commodities and technology stocks. According to latest SPI futures, the ASX 200 index is expected to open the day 78 points or 0.9% lower this morning. On commodity markets, global oil prices slumped on Thursday after the International Energy Agency, or IEA, said oil demand will rise more slowly than previously expected this year, lowering its global oil demand forecast for 2026. World oil demand is set to rise by 850,000 barrels per day this year, the IEA said, down 80,000 barrels per day from last month's forecast. The Brent crude price fell 2.7% to $67.52 a barrel, and the US NYMEX crude price decreased $1.79 or 2.8% to $62.84 a barrel. Gulf futures settled 2.9% lower at $4,948.40 an ounce, as strong US labour data that dampened hopes of near-term US Federal Reserve interest rate cuts offset safe haven demand stirred by geopolitical tensions between the US and Iran. Spot silver dropped 8.9% to $76.54 per ounce at one stage, and copper futures shed 3% as other financial markets tumbled and the US dollar firmed. Iron ore futures fell 0.2% to $100.37 a tonne, as disappointing consumption data from China reinforced evidence of weak domestic demand in the world's largest steel consumer. In Australia on Friday, Commonwealth Bank economists issued the Household Spending Insights report for January. Our data was incredibly consistent in 2025 and provided a very good steer for the pickup in consumer spending from mid-year. In December, the HSI rose by 0.7% month on month and was up 6.3% on a year ago. BWP Property Group, Civmec, Coast Entertainment, Cochlear, GQG Partners, Nick Scully and Westpac are all scheduled to release earnings results. In fact, Westpac has just been released, and on Friday, its first quarter underlying net profit rose 6% from an average of the previous 2 quarters, driven by solid growth across customer deposits and loans. The country's third largest lender by market capitalisation reported unaudited net profit of $1.9 billion for the 3 months ended December 31. On the US economic calendar, the Labor Department is scheduled to release January consumer price inflation data on Friday. Headline CPI is forecast to increase 0.3% in the month, with the year-on-year rate slipping to 2.5% from 2.7%. Core CPI is expected to also rise 0.3% month on month, while the annual core rate is seen easing to 2.5% from 2.6%. On Wall Street, Advance Auto Parts, Cameco, Moderna and Wendy's all release earnings results. The Aussie dollar fell from a near 3-year peak of 71.47 US cents to 70.75 US cents on Thursday, and was near 70.9 US cents at the US close amid widespread deleveraging on markets. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in. Have a great day and a wonderful weekend.